There's a lot of opportunity right now for investors in the secondary market of the closed-end fund marketplace. I think when I'm thinking about building a portfolio right now, I want exposure to U.S. equity funds and equity-oriented closed-end funds, attractive income, but also provides a growth engine to a portfolio. We also still have a positive view on the U.S. equity market at First Trust Portfolios, so U.S. equity funds, I believe, are poised to not only provide attractive income, but also benefit from higher U.S. equities. On the fixed income side of the equation, I want to have a balanced approach. I want to take advantage of the low default environment that we see in credit-sensitive securities right now, particularly senior loans. Default rates on senior loans are roughly 1.3%. The longer-term average is 3%. So default rates on senior loans are very low right now, but there is some credit risk, not a lot of duration risk. Senior loan closed-end funds right now are attractive to get an attractive income stream and not take on a ton of duration risk. But again, there is some credit risk, although, as I said earlier, this is a time when defaults are low. I want to pair some of the credit risk that's associated with shorter duration floating rate senior loan funds and blend in some longer duration but higher credit quality preferred income funds, municipal closed-end funds. Those are two areas which also provide attractive income, but they do have duration risk, but not a lot of credit risk. But I think you can manage the duration risk of muni closed-end funds and preferred income funds with shorter duration senior loan funds. At the same time, you can balance some of the credit risk that senior loan funds and limited duration multi-sector funds have with the higher credit quality muni funds and preferred funds. I think there are a number of factors that investors should consider before they invest in an individual closed-end fund. First of all, the most important factor from my standpoint is the attractiveness of the underlying asset class. I think it's very important when an investor invests in a closed-end fund that they believe that the underlying asset class has attractive fundamentals, attractive valuations. Over time, the share price of a closed-end fund will highly correlate with the underlying net asset value. So it's very important that an investor likes the underlying asset class and believes the valuations and fundamentals are strong for that underlying asset class that the fund is invested in. That's the most important factor, the first factor from my standpoint. After that decision has been made and we start to get more granular, first thing, the valuation of the closed-end fund. The valuation, the price we pay for anything, whether it's a closed-end fund, a new car, a new suit, is always going to be one of the most important factors, and it's no different when analyzing and deciding to invest in a closed-end fund. So what I like to do as it relates to the valuation, i.e. the premium and or discount, is see what a fund's current discount to net asset value is, but then look at the current discount relative to the historical discount, relative to the 1 year discount to net asset value, the historical 5-year average discount to net asset value, 10-year average discount to net asset value if the fund has been out that long. That's how you can really get a sense if a fund represents an attractive value, if the current discount is more inexpensive than the historical discount. And CEFA.com does a really good job of showing investors not only the current discount, but also the current discount and the historical discounts for a fund going back 10 years. That's very important. 2, the track record. You want to see how the net asset value has performed. How has the management team performed? How they've done in managing the assets they've been entrusted with. So the underlying net asset value performance, very important factor. And then finally, the distribution sustainability. You want to try and focus on funds where you think the distribution will be stable or even better, maybe even increasing. There's also tools on CEFA.com that show you not only the current valuation, the current discount, but also showing the historical discounts and valuations. So valuation is very important. The track record of a manager, how they've managed those assets is very important. The NAV, historical track record, very important as well. Distribution sustainability is another factor that I think investors should consider. Those are probably the 3 most important things: the attractiveness of the underlying asset class, the valuation, the track record, and then the 4th would be the distribution sustainability. Is a fund earning its distribution is another important factor as well. There are a lot of advantages for an investor by investing in the closed-end fund structure. One, the ability to buy funds at a discount to their net asset value, to buy $100 worth of assets for 90 cents on the dollar is attractive, and it's also a way to enhance an investor's income stream. When you buy funds at discounts to their net asset value, you enhance your yield relative to a fund of any structure that you're buying at the NAV. When it's at a discount, the share price is at a discount, you enhance your yield. So to me, that's one of the benefits of the closed-end fund structure. Certainly, most closed-end funds are built for income and yield, and they have as their primary goal high monthly income. That's attractive in an environment where we have $17 trillion of negative yielding bonds out there. Roughly a quarter of all debt right now has negative yield. So the closed-end fund structure with an average distribution rate of 7% provides investors with an attractive income stream, which is very much in demand at this time. And closed-end funds, there are a lot of ways closed-end funds are able to enhance their yields. One is through the use of leverage, which yes, does enhance volatility, but it also is an effective way over time to enhance your current income stream. So that's a big advantage of the closed-end fund structure from my standpoint. Another advantage of the closed-end fund structure is from the portfolio manager standpoint, because they don't have to worry about meaningful inflows or outflows into the portfolio. They can take a longer-term perspective when they go out and buy securities for a fund. They can also invest in some perhaps higher yielding but more illiquid securities to enhance the yield in the portfolio, again, because they don't have to worry about inflows or redemptions in a portfolio.